Hey guys, what's going on? Jeb here, and in today's video, we're going to be doing a little bit of technical analysis on Ethereum and the cryptocurrency markets because Ethereum currently finds itself in a very interesting position. As we can see here on the chart, Ethereum actually finds itself in a consolidation pattern, and we can see that consolidation pattern if we draw a downtrend of resistance right here and an uptrend of support right there. Ethereum is very, very far into a consolidation pattern at the moment, and I do expect that Ethereum is going to be breaking this consolidation pattern in a spectacular manner here coming in the next couple of days, considering these two trend lines do cross late on October the 8th, early October the 9th, and when Ethereum does break this consolidation pattern, be it bullish or bearish, I do think it's going to be significant, and I do think we're going to see a lot of price action, and I do think that there's a lot of profits to be made from this. So not only in this video am I going to be breaking down this consolidation pattern and talking about where I think it's going to break, I'm also going to be showing you guys how to trade consolidation patterns, because consolidation patterns are one of the easiest ways to make money in trading, but they are also very, very easy to mess up, and it's very easy to lose money if you're not careful with what you're doing. So I'm going to be showing you how to do it properly in today's video. So without much further ado, let's go ahead and get right into it. One thing I want to get out of the way right off the bat is that we're going to be using the Ethereum over US dollars chart rather than the Ethereum over Bitcoin chart. That's purely because US dollar charts are what I'm used to using, and also because the Ethereum over US dollar chart and the Ethereum over Bitcoin chart show exactly the same thing right now. As you can see, this consolidation pattern shows up very clearly on the Ethereum over Bitcoin chart as well. So we'll be using the Ethereum US dollar chart in today's video. We're currently on the 4-hour chart, but let's go ahead in here to the 1 hour to get a little bit more resolution when we're looking at this. Ethereum over the last couple of weeks has actually pulled all the way back down from where it was trading up well into the $500 and $600 region back over here in June and July to a recent low of around $170, actually about 168, 167 as the local low in the last couple of weeks. And actually, Ethereum's actually been doing pretty well ever since then. Ethereum had a nice little run here. If we take our little measuring device here, we can see Ethereum's done pretty well. We had about 50% gain in total from the recent low to the recent high. And ever since then, Ethereum has been trading in this consolidation pattern, which has been building tension over the last couple of weeks. And like I said, I'll be breaking that down a little bit more in a little bit more detail here in just a second. But let's go ahead and get on to the crypto market recap here on CoinMarketCap before we get into the TA on Bitcoin, or excuse me, the TA on Ethereum. I'm definitely so much more used to doing TA on Bitcoin, excuse me there. Anyway, let's give CoinMarketCap a little refresh here, and we're going to see that Bitcoin is trading almost exactly at $6,600. Since, I mean, we'll go ahead and look at Bitcoin here for a second. Bitcoin really hasn't changed all that much from what it was doing in yesterday's video. If you're interested in my take on Bitcoin and also a short take on EOS, I did a video on Bitcoin in yesterday's video. You can watch that in the top right. But overall, Bitcoin really hasn't done a whole lot in the last couple of days, which is why we're focusing on the altcoins and specifically Ethereum in today's video. Like I said, Bitcoin hasn't done a whole lot, and we're down by about 0.33% over the last 24 hours. Ethereum's down by almost 1% in the last 24 hours, but because of the pattern Ethereum finds itself in, the fact that it is down is actually rather insignificant and not really that important at all. If we sort by change over the last 24 hours here, we see Digitex futures is up by about 18.3% over the last 24 hours. And if we scroll down, we see Chainlink is down by 7%, as well as XRP. XRP has started its little descent from grace ever since having this massive run here in the last couple of weeks. And actually, I wanted to show you guys this. XRP has actually pulled back and is currently, as I'm recording anyway, attempting to get support on the 20 exponential moving average, on the daily chart, on both its US dollar and on its Bitcoin chart. Many of the altcoin charts are looking very similar on the US dollar and Bitcoin comparatives right now because Bitcoin's not moving a whole lot. But I really don't think this is where XRP is going to stop. I do expect XRP is going to pull back to at least 45 cents, which correlates with about 7,000 Satoshis. I don't think it's going to be able to hold support here simply because XRP got so overhyped. It was one of those altcoins that just went off like popcorn a couple weeks ago, and I think it does need a little bit more retracement considering we are still in a bear market. And I do think based on that and also this bearish MACD cross that we've seen, that XRP is going to go a bit lower. But overall, the altcoin markets are definitely looking more red than they are green today. We do see some green, but not a whole lot. Not really anything to write home about, guys. It's been like that for about a week now. The cryptocurrency markets haven't been doing a whole lot, but I think that is about to change. I've been making a couple videos lately about how I think that's about to change, and I think Ethereum, along with Bitcoin and EOS, both of which are also in consolidation patterns, are going to be some of the players that are going to help us start getting a little bit more volatility and a little bit more interesting price action coming back into the market here coming over the next couple of days and into the next week or so. So like I was talking about on Ethereum, Ethereum has been having just a steady downtrend for the majority of the year. Ethereum has been hemorrhaging valuation and also dominance over the year. We had an all-time high of around $1,435 or so, and we pulled back all the way down to nearly about an eighth of that we saw Ethereum pull all the way down to $168. Definitely not a definitely not a valuation that I thought Ethereum would ever see again, but it has nevertheless seen that. And over the last couple of weeks, we've entered back into a consolidation pattern, and I'm a very big fan of consolidation patterns, guys. If you go back on the channel a long way, you will see me talking about consolidation patterns. I do love my consolidation patterns simply because they're so very easy to trade. So Ethereum currently finds itself in one. We see we have our downtrend right here that I drew earlier, and our uptrend right here, which I drew earlier as well. And typically what you see with consolidation patterns is that the price action is going to tighten, it's going to build tension, it's going to coil up like a spring as you start trading sideways into the consolidation pattern, and as you get close to the climax and the apex of the consolidation pattern, if you will, which in this case is over here on the 9th of October of 2018, of course. And I do think that when we break this, it is going to be significant, because not only in Ethereum, but in the rest of the altcoin and cryptocurrency markets, especially on Bitcoin as well, I see a lot of the volatility dropping off, I see a lot of the volume dropping off, a lot of the interest dropping off, a lot of the sentiment turning more bearish, and also just turning kind of more meh, like people just don't really care anymore. And that's really the kind of time where the order book can get thin and when you can see a major run. I really think that's what happened on XRP a little while ago. XRP just was kind of this sleeper, and then we saw some major price action happen on XRP that correlated with some good fundamentals and some good news, and we saw a major run. And I think something similar is going to happen to Ethereum here over the next couple of weeks, although not necessarily in such a dramatic way and such a dramatic fashion that XRP had happened to it a couple of weeks ago. Anyway, now I want to get on to how you would actually go about trading a consolidation pattern, because I do technical analysis in every single video. Every single day we're doing TA on the channel, guys, but I don't talk about trading all that much. And really, what's the point of doing technical analysis if we're not going to be doing trading? I trade, you trade, everybody trades. So let me go ahead and show you guys how you would go about trading a consolidation pattern, because like I said in the intro, there is a lot of money to be made in consolidation patterns, but there's also a lot of money to be lost. You have to be very, very careful with how you come and trade consolidation patterns, because if you don't know what you're doing, you can get burned and you will get cut if you're not careful. One thing that I want to make very clear at the outset of this is that one thing you have to keep in mind with consolidation patterns is that the closer that you get to the apex over here, when you're getting very, very close to the point where these two trend lines cross and the market still hasn't broken the consolidation pattern, you have to be very, very careful about doing TA and trying to decide on which direction the market is going to break. When Ethereum is, for example, if Ethereum continues trading sideways and it's like over here somewhere, it's like right in here, you're not really going to be able to do any technical analysis to figure out which way Ethereum is going to be breaking. The closer you get towards this little apex right here, this little climax of the consolidation pattern, the less effective your technical analysis is going to be. And the reason for that is because the risk of someone coming in and buying a ton of Ethereum or dumping a lot of Ethereum and then breaking one of these uptrends, just a single whale doing that, dramatically increases. Because one problem that a lot of people don't realize is that whales do not have anywhere near as much power as people give them credit for. But where a whale does have a lot of power is in a situation like this, and this is where market manipulation can really come into play. When Ethereum or Bitcoin or EOS or whatever cryptocurrency or asset in general actually is very, very deep into a consolidation pattern, someone can come in here and manipulate the market by dumping, I don't know, 100,000 Ethereum or buying 100,000 Ethereum, selling $100 million worth of Ethereum and dumping the market below the uptrend of support, or buying a ton and breaking us above the uptrend of resistance. So you have to be very, very careful about that, but that's okay, because the way that you want to trade consolidation patterns actually has nothing to do with technical analysis on which way you think they're going to break in the first place. But if you're worried about that, and if you are making your trades based on which direction you think the consolidation pattern will break, be very, very careful of that, because when you get later on in the consolidation pattern, it's much, much more risky to try and do it that way. Let me show you guys the right way to trade a consolidation pattern. There's two real ways you can trade a consolidation pattern. I'm going to show you both of them here. One thing you can do with the consolidation pattern is when it's going sideways and you're looking for a breakout, because you want to trade a consolidation pattern on the breakout. You don't want to just be buying right now. Like right now, I'm not buying Ethereum. I'm going to wait for some kind of breakout, and then I'm going to be buying. I'll tell you what I'm going to do on Ethereum. I'm going to do one of two things. I'm going to lay out both scenarios, and I'm going to pick one, and I'm not going to get into which one I'm going to do, but I'll show you guys two different ways you can trade a consolidation pattern. One thing you can do with the consolidation pattern is wait for the market to come down to the uptrend and then have a buy order right here on the uptrend. And then when the market inevitably bounces, then you actually manage to go up. But if it doesn't bounce, I shouldn't have said inevitably, but if the market bounces, then you're set, because then the market will continue going up and you got support on the uptrend. And what you'd want to do in this scenario is maybe have some buy order right around here somewhere, and then a very, very tight stop, maybe 1 or 2% below. We can grab this tool over here, which is our our long and short position, and then we can actually drag this out here. I don't think I've ever used this on camera before, but you can use this and see where you want your stop. So say we want to open a position at $225 for Ethereum, and we have a stop down here at $220. Then we have a decent amount of risk, but then we also say if we break this, then we say, okay, where's our target for Ethereum? Our target may be way up here, and then we have a very good risk to reward ratio. What you'd want to do in this scenario is wait for the market to pull back to the uptrend, and then have a buy order right on the uptrend. So when Ethereum comes down here, then you have a buy order right here on the uptrend somewhere, you buy in, and then you have a very, very tight stop, maybe a 1 or 2% stop, because if you break below it, then you're probably going to see, you may see a fake out like right here, but what you're more than likely going to see is an actual confirmed breakout. So maybe 2, 3, 4% at most of a stop down there, and then you can get a really good buy-in, but that's kind of the more risky way to do it. The way that I typically go about trading consolidation patterns is by putting a buy order above the downtrend of resistance up here. So if the market comes down and then it comes up here and then it breaks out and the market's going to go way up here somewhere, then that's okay, because I'd have a buy order right here, and then I'd have a stop loss actually back down here. So you risk a little bit more, but you're much more likely to catch an actual breakout to the bullish side rather than a falling knife, and a falling knife that can cut you very, very easily, especially if you mess up your stop loss or you do something wrong. Those are the two different ways you can do it. So let me go over that again. One thing that you can do is have an order right down here. So you buy on this uptrend and then a very tight stop so that you don't lose any money if we actually do see a confirmed bearish breakout. That's one way to do it. And the other way to do it is by having a buy order above the downtrend of resistance, buying in, and then having a stop loss down here, a very tight stop loss down here somewhere, just in case the market does have a fake out and goes back below the downtrend of resistance. You could even have a stop loss somewhere like right here instead of down here, simply because if the market comes up here and then breaks above and then falls back down, it was probably a failed rally, and then you would only lose a couple percent rather than maybe 5 or 6% in that case. So that's a couple different ways that you can go about trading a consolidation pattern. But remember, guys, one thing that's very important with consolidation patterns is that, one, when you get much, much further into a consolidation pattern, they're much, much more risky because the whales can come in and manipulate the market very, very easily. And two, you don't want to just buy into a consolidation pattern all the time based on what the consolidation pattern, which direction you think the consolidation pattern is going to break. Because, of course, remember, consolidation patterns are typically continuation patterns. So if you have a market that's going like this, and then we see a consolidation pattern, and we have our triangle, then there's probably about a 60 to 70% chance that this is going to break bullish. But there's no reason to only rely on that when you can do what I just showed you and trade it with an even less amount of risk by using stop losses to your benefit. You can do it this way, and you will normally win if you follow that technical analysis, but you can be even safer and make even more money and lose even less money when you're wrong if you do it the way I just showed you. So be very careful with consolidation patterns, but one thing to also keep in mind is that consolidation patterns are one of the easiest ways to make money in all of cryptocurrency trading, guys. It's really, really easy. Whenever a market breaks an important level of resistance or a level of support, then you can long or short the market and make a ton of money. All you got to do is be there when it happens. One thing that you also want to remember is that when you're actually seeing a break, not always are you going to see a confirmed massive breakout. Sometimes you may see something that's kind of a failed rally or kind of a fake out like we saw down here. Typically what you'll see is that you'll see a major amount of volume come in. You'll see a candlestick that's like that tall come in, and you'll see a ton of volume come in when you're actually properly breaking the consolidation pattern, and none of these were actually the case because we didn't actually break it. Anyway, guys, I hope that helped you guys figure out how to actually trade consolidation patterns if you weren't already that familiar. And if you were already familiar, then maybe what I showed you was something that you didn't realize, and a strategy for trading consolidation patterns that you hadn't perhaps thought about. This is how I go about trading them, and you can make a ton of money trading consolidation patterns, guys. I'm serious. With only consolidation patterns, because of how common they are and because of how much money you can make. If only you did nothing else, if only you traded consolidation patterns, you could probably make a full-time living if you had enough capital trading cryptocurrencies. There's a lot of money to be made in them, but like I said, you do have to be careful. Anyway, guys, I do hope you got some value out of this video. If you have any questions, as always, that's what the comments section is for, or you can also come and talk to me in person with the link to join the Discord server in the description down below. If you want to learn more about technical analysis and trading, that's what the Cryptocurrency Technical Analysis Academy is for. There's a link to sign up in the in the description down below. You can click that, and without having to buy it, then you can also look at what's in the course so that you know what's in the course before you go and buy it. I do think it's a very good value. For 99 bucks, I'm teaching basically everything I know about technical analysis, and I'm also recording videos every single day right now for new videos to be uploaded to the course free of charge for people that have already paid for the course. But remember, guys, since I'm adding a bunch of more videos to the Cryptocurrency Technical Analysis Academy, I'm going to have to be raising the price in a month or so. I'm not putting an exact date on that, but the price is probably going to be rising from $100 now to $150 or $200 in the future. I'm not totally sure on what the price actually will end up being. Anyway, guys, like I said, that's going to do it for this video. I do want to thank each and every single one of you for watching, as always, and I will see you guys in the next video. Peace.